Welcome to another deep dive. Today we're digging into what our sources are calling a really powerful new tool in the financial markets. We're looking at an all-in-one TradingView indicator. The idea is to cut through some of the noise. Our mission, to unpack this thing, this system, and give you a shortcut to understanding its potential. It apparently measures volatility, finds dynamic support and resistance, spots trends, reversals, even liquidity sweeps. Quite a package. So let's get into it. The sources talk about Fibonacci Bands by someone called Big Beluga on TradingView. What exactly are we looking at here? Is it just like Bollinger Bands with a different name?
Great question. They might look a bit similar at first glance, but no, they're fundamentally different. The core is Fibonacci ratios.
Wow.
38.2%, 61.8%, 100%, those numbers that pop up all over markets. It starts with a smooth 20-period moving average, and then these bands are calculated using those Fib levels. They act as dynamic support and resistance zones. And you often see price reacting pretty precisely right at these bands. It's quite interesting.
Okay, Fibonacci based. That's different. The sources make a big deal about the 100% band specifically. What's special there?
Yeah, the 100% band. What's fascinating is that it often marks a point of, let's say, exhaustion. When price pushes beyond that 100% level, it often means the move has overextended itself. Too far, too fast, and that frequently signals a pretty strong reversal is coming. So it's really useful for mean reversion strategies.
Right, betting on the snap back towards the average.
Yeah.
Makes sense. So we've got dynamic levels, a reversal signal. What about just knowing which way the market's generally heading, the trend?
Yep, it covers that too. The middle band itself gives you a visual clue. If it's a solid line, price is generally above it, suggests an uptrend. If it's dashed, prices below suggests a downtrend. Plus, you can just look at the slope of the whole channel. Is it pointing up, down, or is it flat? It gives you another sort of immediate read on the trend.
That sounds pretty intuitive.
Yeah.
But, markets can be tricky. What about those moments where it looks like a move is happening, but then it snaps back? The fake outs. Does this thing help with that?
Now, this is where it gets really interesting, I think. A key feature is what they call liquidity sweep detection. It's actually designed to spot when big institutions might be deliberately triggering stop-loss orders before making their real move. You'll see a white line pop up on the chart when the indicator thinks this is happening. And then, crucially, you look for a green or red dot signal right after, suggesting the reversal is actually starting. It's like a little window into those institutional games.
Wow, okay. That's quite an edge if it works. But, like any tool, it won't be perfect. How do the sources suggest we boost the accuracy, avoid jumping in on bad signals?
Good point. Accuracy is key. The recommendation is to use the Relative Strength Index, the RSI, for confirmation. Standard tool, but effective here. So for a short trade, you'd want to see the price hitting maybe the upper bands and the RSI showing overbought like above 70 and then crossing below its own moving average.
Okay.
And for longs, the opposite. Price near the lower bands, RSI showing oversold below 30 and then crossing above its moving average. That extra step helps filter things out.
Got it. So use the RSI cross to confirm the signal from the bands. That makes sense. So if we put all these pieces together, what are the main high probability entry setups this indicator suggests, especially using that RSI confirmation?
Right, connecting the dots. The sources point to basically three main high probability setups. First, when price actually pushes beyond that 100% band, that extreme exhaustion point we talked about. Second, when price enters the zone between the 61.8% and 100% bands. That's often a key area for reversals or consolidation before the next move. They call it the red-green zone.
The zone itself, right?
And third, after you see one of those liquidity sweeps that white line and you get the RSI confirmation signal soon after. But it's really important to stress, no system, absolutely none, is 100% accurate. These are about probabilities.
Absolutely. And that leads perfectly into the final crucial warning from the sources. Risk management. They hammer this point home. Specifically, they mention the 1% rule, which means simply don't risk more than 1% of your total trading capital on any single trade. So if you have a, say, $10,000 account, your maximum risk per trade should be $100, period. Says you stay in the game.
Couldn't agree more. That's foundational. Doesn't matter how good the indicator is if you blow up your account on one bad trade.
Exactly. So there you have it, a deep dive into this pretty comprehensive Fibonacci Bands indicator on TradingView. Lots of features packed into one.
And it may be a final thought to leave you with. Even if you decide not to actively trade using these bands, just understanding how tools like this work is valuable. Thinking about volatility, dynamic levels, liquidity zones, it can really change how you analyze market news and commentary. It helps you see some of the invisible forces at play, gives you a more critical perspective on finance overall.